Sure. See, as far as the US economy is concerned, our expectation is that the recovery is evolving on its own course. There's definitely some bumps across. I think recent statements from the Fed did talk a little bit about a delayed interest rate increase, and I think that's a good guidance to read here. I think away from tapering, which is now proceeding along a pretty well-flagged path, I think the biggest question to focus on is the pace of monetary policy normalization, as in short-term interest rates. Now, again, the Fed's recent statements did talk about staying lower for longer, and that should, I think, support the markets. I do think, though, the Fed's going to be very data dependent, and if we do see some of the slack being taken up in the economy, you will start to see policy getting normalized earlier. But at this point in time, it's fair to expect that the policy will remain accommodative for now, and that's the main focus, as in short-term interest rates. See, you can look at the 2-week movement and say it's hit a 2-week high, but really the dollar index has been pretty flat on a year-to-date basis. It's been very, very range bound, if anything, with a little bit of a bearish bias. I think if we look at the exchange rate versus many other currencies, I think the outcome is going to be very different. For example, our expectation is that the dollar will strengthen against the Japanese yen, as in the yen will weaken, but at the same time, we also expect many Asian emerging currencies to be stronger against the US dollar. We've seen the rupee strengthen, we've seen the Indian rupee strengthen, we've seen some of the ASEAN currencies strengthen, the Korean won strengthen, and we think some of this will continue, but against the yen, the dollar will be stronger. See, first of all, if you look at the interest rate outlook in India, our economists are calling for a non-consensus increase of 50 basis points in the second half this year. Obviously, a lot of this is going to be dependent on how inflation evolves and how the macro variables evolve after the elections. But at this point in time, that is the expectation. Having said all of that, I think one of the biggest tailwinds for the country is a stronger currency, which helps give some flexibility to the Reserve Bank of India. Our expectation on flows is that it's going to be not very QE dependent or dependent on external macro variables as it was last year, but it's going to be a lot more dependent on domestic factors. And we've definitely seen very strong inflows on a year-to-date basis. Last few days have definitely seen some consolidation, and you could probably see some more consolidation ahead of the election results in a couple of weeks' time. But in general, we're positive on flows continuing into India as we get into a cyclical recovery.